I dare you to watch this video from start to finish because it's the ultimate investment guide that covers every type of investment technique and strategy. Investing in 2024 represents a pivotal moment for investors as the global economy continues to evolve in response to a range of factors, including inflation, interest rate hikes, geopolitical tensions, and the accelerating pace of technological change. This exploration will guide you through the essential considerations for building a robust investment portfolio in 2024, supported by comprehensive data analysis, reports, and emerging trends. The global economic landscape in 2024 is shaped by the aftermath of the COVID-19 pandemic, ongoing supply chain disruptions, and persistent inflationary pressures. According to the International Monetary Fund, IMF, global economic growth is expected to slow to 2.7% in 2024, a decrease from 3.2% in 2023. This deceleration is driven by several factors, including tighter monetary policies, geopolitical conflicts such as the Russia-Ukraine war, and the economic impact of climate change-related events. Central banks, particularly the US Federal Reserve, have adopted aggressive interest rate hikes to combat inflation, which peaked at 9.1% in the US in mid-2022. By the end of 2023, the US Federal Reserve's benchmark interest rate had risen to 5%, with expectations of further increases in 2024 to potentially 5.5% or higher. This environment of high inflation and rising interest rates presents both challenges and opportunities for investors. Historically, periods of high inflation and interest rate hikes have led to increased volatility in financial markets, with certain asset classes and sectors performing better than others. For instance, during the inflationary period of the 1970s, energy and commodities outperformed, while bonds and equities faced headwinds. Understanding these historical trends can help investors make informed decisions in 2024. Diversification remains a fundamental strategy for managing risk and capturing opportunities in a volatile market. In 2024, a well-diversified portfolio should include a mix of equities, bonds, real estate, commodities, and alternative investments, each selected based on current economic conditions and future projections. Let's delve into each asset class, exploring the data and trends that will shape their performance in 2024. Equities. The stock market remains a cornerstone of any investment portfolio, but 2024 will require a more selective approach to equities. The S&P 500, which had a volatile run in 2022 and 2023, is projected to see modest growth in 2024, with analysts forecasting returns in the range of 5 to 7%. High interest rates will likely put pressure on high-growth technology stocks, which rely heavily on cheap borrowing to finance expansion. However, certain sectors are poised to outperform, particularly those that can thrive in a high-inflation environment. The healthcare sector is expected to be a standout performer in 2024. An aging global population, coupled with advancements in biotechnology and personalized medicine, will drive demand for healthcare products and services. According to a report by Deloitte, global healthcare spending is projected to grow at a compound annual growth rate, CAGR, of 5% from 2023 to 2027, reaching $12 trillion by 2027. Companies involved in pharmaceuticals, medical devices, and health technology are likely to benefit from these trends. Investing in healthcare-focused, exchange-traded funds, ETFs, or individual stocks within this sector could provide strong returns. The energy sector is another area of interest, particularly oil and gas companies, which have seen a resurgence due to supply constraints and increased demand as economies recover from the pandemic. The International Energy Agency, IEA, forecasts that global oil demand will reach 104 million barrels per day by 2024, up from 99.7 million barrels per day in 2023. This increased demand, coupled with geopolitical tensions that could disrupt supply, may lead to higher oil prices, benefiting energy stocks. Additionally, companies involved in renewable energy, such as solar and wind, are expected to see continued growth as the world transitions to a low-carbon economy. Real estate. Real estate remains a critical component of a diversified portfolio, offering both income and capital appreciation. However, the real estate market in 2024 will be shaped by rising interest rates, which have made borrowing more expensive and cooled off housing markets that were overheated during the pandemic. Despite these challenges, certain segments of the real estate market are expected to perform well. Industrial and logistics properties are likely to see continued demand, driven by the growth of e-commerce and the need for distribution centers and warehouses. According to CBRE, the global industrial real estate market is expected to grow at a CAGR of 6% through 2025. Real estate investment trusts, REITs, focusing on industrial properties or those that offer inflation-protected income streams, are likely to perform well in 2024. Additionally, multifamily housing in urban areas with strong job growth remains attractive, as high home prices and rising mortgage rates push more people into renting. Bonds, fixed income investments, particularly bonds, face a challenging environment in 2024 due to rising interest rates. As rates rise, bond prices typically fall, leading to lower returns for investors. However, not all bonds will be adversely affected. Short-duration bonds, which have less sensitivity to interest rate changes, offer a safer option for those looking to maintain exposure to fixed income. Additionally, Treasury inflation-protected securities (TIPS), which are designed to protect against inflation, could offer attractive returns as inflation remains elevated. Corporate bonds, particularly those issued by companies with strong balance sheets, are another area to consider. While the yields on corporate bonds have risen due to higher interest rates, they still offer better returns compared to government bonds. Additionally, emerging market bonds may provide higher returns, albeit with higher risk, as these economies continue to grow. Commodities. Commodities will play a critical role in the 2024 investment landscape, particularly as a hedge against inflation. Gold, traditionally seen as a safe haven during times of economic uncertainty, remains an essential part of a diversified portfolio. After experiencing volatility in 2022 and 2023, gold prices are expected to stabilize and potentially rise in 2024, as investors seek protection against persistent inflation and geopolitical risks. According to the World Gold Council, global demand for gold is expected to increase in 2024, driven by central bank purchases and increasing retail investment. In addition to gold, other commodities like oil and agricultural products are likely to see price increases due to supply chain disruptions and climate-related challenges. The energy sector, particularly oil and gas, has been a standout performer in recent years, benefiting from rising demand and constrained supply. The International Energy Agency, IEA, projects that global oil demand will continue to rise, and energy stocks, especially those with strong dividend yields, could offer both income and capital appreciation in 2024. Alternative investments. As traditional asset classes face headwinds, alternative investments such as private equity, venture capital, and hedge funds can provide diversification and potentially higher returns. These investments are typically reserved for high net worth individuals, but there are ways to gain exposure through publicly traded vehicles like business development companies, BDCs, or closed-end funds that invest in private equity or venture capital. Cryptocurrencies have become more mainstream but remain highly volatile. The crypto market saw significant declines in 2022 and 2023, driven by regulatory concerns, security issues, and the broader risk-off sentiment in financial markets. However, the underlying blockchain technology continues to attract interest, with potential applications in finance, supply chain management, and digital identity. For investors willing to take on higher risk, a small allocation to cryptocurrencies like Bitcoin or Ethereum, or blockchain-focused ETFs, could provide substantial upside potential. Sustainable investing, ESG. Environmental, social, and governance, ESG. Investing continues to gain momentum as more investors seek to align their portfolios with their values. According to PwC, ESG assets are expected to account for over 1/3 of total global assets under management, AUM. By 2025, companies that score well on ESG criteria, particularly in areas like renewable energy, clean technology, and social equity, are likely to attract more investment and deliver strong returns over the long term. As we look toward 2024, it's essential to consider holding some cash or cash equivalents as part of your portfolio. Cash not only acts as a buffer against market volatility, but also allows investors to take advantage of buying opportunities when markets dip. With interest rates rising, money market funds and high-yield savings accounts offer better returns than they have in years, making them an attractive option for parking cash. In conclusion, investing in 2024 requires a thoughtful, diversified approach that takes into account the current economic environment, interest rates, inflation, and emerging trends. By allocating assets across equities, bonds, real estate, commodities, and alternative investments, while also keeping an eye on geopolitical risks and market sentiment, investors can build a resilient portfolio that withstands volatility and captures opportunities in the year ahead. And yes, especially if you're facing financial challenges, here's an opportunity to earn $25 to $35 per hour with just your mobile or PC. No experience needed. Don't wait any longer. Start now and make a difference for your family. Click the link in the description. Thank you for joining me today as we explored how to invest in 2024. Please share your thoughts or questions in the comments section below so we can discuss and learn together. If this video has provided you with valuable insights, please consider supporting our channel. Your support helps us continue to deliver in-depth financial content to help you navigate the complexities of investing. Don't forget to subscribe to our channel for more detailed analysis and investment strategies. Until next time, stay informed and invest wisely.